Aditya Arora is here with us to talk more. Aditya, what are you making sense of the market right now? Small cap, mid cap, benchmark indices. Before we talk about your technical strategies right now.
Very good afternoon. So I think markets are still in very strong hands. Although there is little bit of correction, as you rightly said, markets are trying to fight the important pivot levels like 18,800, 18,900, which is the breakout zone. If you look at the history, then whenever market reaches a breakout zone, it shakes out the weak hands out of the market, and then when the market is light, it cruises away to lifetime highs. It's a very easy ride over there. But if we have to gauge the trend of the market and understand how strong it is, then we must actually look at the small caps and mid caps, which are still doing quite well. Although sector rotation is happening, you're seeing rotation from one sector to another. That's part of a bull market. Important observation is that one must book profit only when one thinks that it's the end of a bull market. But if you look at the technical patterns, they are suggesting it's a start of a bull market. This correction, small dip, which is 1% or so, is just a shakeout. And it's just a start, something precursor to a next upward rally, which could start from 18,900, and small caps and mid caps would definitely lead the pack. And we at Analytic Research believe that till Diwali, Nifty could be at 19,500 and 20,000 easily.
Wow, 20,000 easily. Interesting. So what he means is that in the very tactical kind of a view, very near term, small kind of a dip or a shakeout is not ruled out, but structurally things look strong. What are your trading ideas right now, Aditya?
So I have two picks right now. One is MCX, which is a very niche kind of a segment wherein MCX holds the monopoly in terms of commodity trade. So after consolidation and a shakeout, there's good volume participation in the counter. This stock can be bought at 1605. 1504 should be the stop loss, and 1810 and 1900 should be the target. Second, as you rightly said a while back, that pharma sector is doing well, and it has been doing well for a very long time now. Where the market is lacking leadership, pharma sector is doing really well. So mid caps, small caps are coming back, and a forgotten counter was Spark. So today it made a very strong move. It can be bought at 209, 194 should be the stop loss, and 239 and 250 should be the target.
Aditya, that's surely your top views and top stocks that you've picked out today for us in terms of the picks there. And MCX is surely that one that we're seeing in terms of volumes as well. But when you look at high volumes in the FNO space, is something like a Dixon or anything in that EMS space that's something you would watch out for? Dixon surely has seen that run up, has that benefit of on the fundamental side of PLI schemes as well. What is the chart indicating for Dixon Tech now?
Dixon Tech is a good counter. And when we saw correction in IT space, then Dixon also corrected very sharply. But I'm not overall very bullish on the IT space. Although it's a bull market and IT sector can also participate, but I feel that it would outperform in the next leg of the rally. And we have always seen a leader in the previous bull market always underperforms in the next bull market. So I don't think IT sector can do really well, although Dixon in the technology space can outperform.
Five-star business finance, that stock has been coming back after a long while. Look at that one, Aditya. It's trading almost 5% high. Trades almost at a day's high at 665. Do you think it can make a 700 dash towards that levels?
I think you have picked a gem from the pack, and the patterns are very strong. And I think it can easily breach 700 mark, and it can even raise till 800 levels. The patterns are very strong. It can be bought at 666, and 590 should be the stop loss, and 700 and 800 should be the target.
Sure, Aditya. And also, you just the pharma healthcare space. Now, something that is looking interesting is also Metropolis Healthcare. We had seen some concerns around that, then a correction. Now, last couple of weeks also, again, we're seeing a bit of a pace that has picked up here. What is your thought on Metropolis Healthcare? Would you ever consider it right now?
Absolutely, I would like to consider it because after a steep correction, the stock made a strong base and it consolidated for a while. Now it has created a strong base for itself, so it's ready to dash now. It can definitely be bought at 1441 and 1350 should be the stop loss, and 1550 and 1600 should be the target. So the counter looks strong.
Okay, and before we let you go, I would also like to speak to you about this entire broking space, Motilal Oswal Financial Services in particular, because if you look at what is happening to ICICI Securities, and we saw Angel also reacting positive in trade, it seemed to have sparked a kind of a rub off on the entire broking slash financial services space. So can you check us the chart of Motilal Oswal, almost 700 now?
I think Motilal Oswal on the charts underperforms the other pairs like ICICI Securities and Angel One. The breakout point for Motilal Oswal would be 730. Until that point is not breached, I wouldn't like to look at the counter.
Okay, Aditya, thank you so much for your time this afternoon on ET Now. It was a pleasure having you on the show. Thanks.
Thank you.
Let's move on.